All right. Hey, everyone. Welcome back. So you've been digging into crypto, haven't you? Looking for some passive income. Specifically, I hear you're interested in the Waves platform. Am I right?
Yeah, Waves is making some noise in the DeFi space for sure.
Definitely. And when it comes to passive income on Waves, liquidity pools seem to be all the rage.
Absolutely, you provide liquidity, help facilitate trades, and you earn rewards in return. Sounds pretty good, right?
Right. It does sound pretty sweet. So in this deep dive, we're going to break it all down. We've got some seriously juicy info on the best pools for you to jump into, all on the Waves protocol.
That's right. We're going to look at which pools are generating the highest yields right now and why. Plus, we'll go over some important things to keep in mind before you dive in.
Awesome. Let's get started. Okay, first up, we've got the Perfection Waves pool. This one's boasting, wait for it, a whopping 775% max APR.
Yes, 775%. That's incredible. But before everyone gets too excited, it's important to remember that APR, or annual percentage rate, can fluctuate. It's not a guaranteed return.
Right, right. I mean, I knew there had to be some sort of catch, right? So what's the deal with these super high APRs? What makes them possible?
Well, it's all about supply and demand. With Perfection Waves, it's a relatively new project. It's got potential, but there's also risk involved. That higher risk can translate to a higher potential reward, hence the massive APR.
So higher risk, higher reward. Got it. Okay, so let's back up a bit. Can you quickly explain how liquidity pools actually work for anyone listening who's not familiar? Think of our listeners like I don't know, a teenager who's just starting to learn about this stuff.
Okay, sure. Imagine a big pot of money where everyone chips in, and that pot is used to facilitate trades on a decentralized exchange. You contribute your tokens to the pot, and every time someone uses those tokens to make a trade, you earn a small fee. The more trades that happen, the more fees you earn.
Okay, so you're kind of like a mini bank, providing the fuel for these decentralized exchanges.
Yeah, you could think of it that way.
Makes sense. But what about this thing I keep hearing about, this impermanent loss? What is that all about?
Yes, impermanent loss. This is something you definitely need to understand before you jump into any liquidity pool. It happens when the price of the tokens you've deposited in the pool changes relative to each other. Basically, if the price of one token goes up a lot more than the other, you might end up with less value than if you had just held onto your tokens in the first place.
Ooh, that doesn't sound good. So there's definitely some risk involved.
Right. It's always important to weigh the potential rewards against the risks.
Absolutely. Okay, so moving on to some other pools worth checking out. We've got the Peta Waves pool. What's the deal with that one?
Waves is another interesting option. It's got a 162% max APR. Still a pretty impressive number, though not quite as high as Perfection Waves. It's always a good idea to research projects like peak dollars before you invest, though. Due diligence and all that.
For sure. And what about people who are a little more risk averse? Are there any options for them?
Yeah, definitely. Take a look at the WaveSeas ERC20 pool. It offers a solid 106% max APR with USDT, which is a stablecoin pegged to the US dollar.
Oh yeah, stablecoins, a bit less volatility there. I like that. So it sounds like it's a good idea to spread your investments around, right? Not put all your eggs in one basket, as they say.
Absolutely. Diversification is key. You want to spread your investment across different pools with varying risk profiles. That helps mitigate potential losses if one pool doesn't perform as well.
Okay, smart move. Now, let's say I'm ready to jump in. Where do I actually find these pools?
All three of the platforms mentioned in our research, WX.network, Axley.io, and Swap.fi, they all have pretty user-friendly interfaces. You'll need to connect your crypto wallet, choose your pool, and deposit the required tokens. It's pretty straightforward.
Sounds pretty easy. But how can I make sure my investments stay on track, with the crypto market changing so quickly and all?
Well, you've got to stay informed. You need to constantly monitor market trends, price fluctuations, any news or updates related to the projects you invested in. Be prepared to adjust your strategy if needed.
So basically be ready to adapt, kind of like tending a garden, right? You got to stay vigilant and adjust to the changing conditions.
Exactly. It's a good analogy.
So stepping back for a minute, what does the popularity of these high-yield pools on Waves tell us about the DeFi space in general? I mean, why are we seeing these huge APRs popping up all over Waves?
Well, I think it points to a growing demand for yield-generating opportunities in DeFi. People are looking for ways to earn passive income, and these pools offer a way to do that. This could lead to more innovation and competition in the space, potentially driving yields even higher and attracting even more investors.
Wow, so this could just be the beginning. Things could get even crazier in the world of passive income with crypto.
It's definitely possible. It's a really exciting space to be watching right now.
That's for sure. Well, there you have it, folks, a deep dive into the potentially rewarding world of Waves liquidity pools. Lots to think about, right?
Absolutely, but remember, always do your own research before investing in anything. So don't just take our word for it. Make sure you understand the risks involved before you put any money down.
Couldn't agree more. Well, folks, it's time for you to go do some exploring of your own. See what's out there. Happy investing and stay curious.
Happy investing.